Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, artists, you name it, across the world of crypto and blockchain globally. And I have an amazing guest for you today. He is coming to us. He's in Dubai. He is the CEO and co-founder of Coinify. His name is Mark Højgaard. Mark, welcome.
Thank you so much, Jamil, and thank you for having me.
Very welcome. Very welcome. So let's kick things off and ask you first, what is your background, and is it a logical background for what you're doing now?
Well, that's a great question. I guess it is. I think I had my first job when I was at the age of 12. And then I started my own kind of wheelings and dealings. Later on in my life, I studied economy and philosophy, and actually a very nice combination out of a Copenhagen Business School in Denmark, where you're questioning the obvious and you're looking into economy with some other perspectives, which actually is what we do when we are talking about the crypto economy and what is real money and all that good stuff. Studying Karl Marx, Das Kapital, actually something you should consider reading if you haven't done that, talking about what is value. In some extent. Well, after my economy and philosophy study, I started my first venture-backed company at the age of 20. And the next 30 years has been one big roller coaster of being involved in many interesting startups.
Very cool. And one of those startups is Coinify, right? So what is that all about? And what sets it apart from other crypto payment solutions?
Yeah, you can say Coinify started very early on. It was in 2014. So we are kind of some of the OGs in the business. Started in all small basements around the world in meetups talking about the Bitcoin phenomena. To 10 years after, we made an exit to a stock exchange company in Canada, New York as well. And you can say the company is two-headed beast. We do payments, which is one of the major parts of the industry, and we do trading. Circling back to payments, we allow people to pay with cryptocurrencies on websites. We do that by converting the cryptocurrencies to whatever currency you need as fiat currencies, US dollars, euros, and so forth, and do that payout. Where we differentiate ourselves in that sense is that we are working with the biggest payment operators in the world, or payment service providers, as they're also called. So that is Worldline, it's Nuvei, it's Nexi in Europe, the biggest in Europe, and more or less a big chunk of the biggest payment service providers in the world. And that implies that we need to have the highest level of compliancy in our operation. We need to hire classic financial people to understand their language and deliver a service that live up to any standards in classic fiat world. Checking back to the trading point, we help exchanges, wallets with what we call in industry on and off ramp, meaning that you can, with a credit card, with Apple Pay, with bank transfer, you can buy crypto and store them directly on a wallet. So we are not the wallet, we are not the exchange, but we simply help to on and off ramp crypto. Where we kind of spearhead that in the early days, we did that for blockchain.com, the biggest wallet at the time back in 16, 17, 18. We did that for 3 years. Now there's a lot of others in the market. But what we differentiate ourselves is we have done a very successful white glove OTC desk. We believe that what we see now is a lot of newcomers coming into the market that want to go in big with more than $100. And they need a live person like you and me sitting talking face to face on a webcam and doing these trades where the trust is up in the highest level possible. So that's what we do: payment, trade, and VIP trade for you can say people who want to invest in the millions, family office, high net worth individuals, and so forth.
Awesome. So trading, I want to talk about that first, right? There are some announcements, actually we go back to January with the ETFs in the US, but then this past week, there were ETNs or ETPs in the UK that were now going to be allowed. So how's that going to impact, not only trading, but like the market, like for like retail usage, like Spotify, Uber, and other consumer payment gateways?
I definitely believe that it's changing the sentiment in the market at the moment, since professional investors, corporate hedge funds can suddenly interact with the right now only the Bitcoin, but potentially also other of these cryptos. It somehow gives a big trust to the industry. And that's why we see big merchants, super apps are heading into this field as well, because they see that this is maybe not that dangerous that assumingly they believe it was like a few years ago. And I actually believe it's fair, even though we've been talking to the biggest brands in the world for ages about, please, you should consider accepting cryptocurrencies. But they have a brand to protect. And every now and then, people, claim Bitcoin instead. How many times have you read that, Jamil? It's ridiculous, right? But you also have the ICOs with a lot of negative press, which is completely fair. You have the glory days that ended up with a crash of FTX, Three Arrows, and many others. So of course, these brands have their brand to protect, and it has been difficult for them to say, especially for the legal and compliance department, to say, listen, we want to go all in and even though they're not touching the crypto by accepting with using Coinify as a middleman, but they still put their brand into something that they cannot control. But as said, with these new ETFs of this world coming, I think we're bringing much more trust to the market. And we are seeing bigger and bigger brands saying, hey, we want to do this as well.
You mentioned ICOs, you mentioned FTX. We got a new problem. It's called meme coins, right? How have you seen on your end yet affect that sentiment, or is it too early?
Well, we have done some rather good trades on different meme coins. However, we are very reluctant on dipping our toes into this space, being a company that is protecting the biggest PSPs in the world, the payment service providers, right? So we cannot onboard these as means of payments to start with. And for trading, some of our clients, which is a DeFi project that use us as on and off ramp, they potentially have a meme coin that they are, using our BTC trading, and then they swap it into their own meme coins. And I also believe this is a new circus that is running, and we will see a lot of pump and dumps in the market. And we are very reluctant on engaging with these types of businesses.
So you recommend then what types of currencies these these peer-to-peer these payment companies should accept, like Bitcoin and maybe Ethereum, maybe Litecoin and stuff like that, right?
Indeed. And speaking of crypto as a means of payment, when we started Coinify in 2014, we were completely big believers that Bitcoin was the future of payments. We can see today that Bitcoin is not a classic payment vehicle. It has a completely different asset or attribute attached to it. Even though, honestly, when you look at our data and we do millions of transactions, we see still the dominant part is Bitcoin as a payment vehicle, but it doesn't really make sense. And I don't believe that will be the future. Also, Ethereum, we see those, but it's not a payment vehicle as well. Litecoin is trying to reduce the gas fees and make some services that allows you to do smaller transactions for a lower fee, which actually makes sense. But comparing the different types of tokens or cryptos as a means of payment, I don't believe we have seen a crypto that really is the future of payments. However, the stable coin is something we see as a theme, that more and more people are doing trades, big trades, commodity trading in stable coins, similar to the BRICS in China, where they're trying to get out of the rails of USDC. So we see a spike in the USDC, especially in the stablecoin section, as a means of payment, because it actually makes sense. And honestly, when you look at the Bitcoin price right now, would you use it to buy a bike or a car, or, especially when it goes up? Not really. Maybe if it's stable, you will. But no, even Bitcoin is not the future of payment in my book.
I had somebody I used to work with at my old company reach out to me recently and say, "Hey, this guy wants to buy my company from me, one of my companies from me using Bitcoin, and can that possible?" I said, "Yeah, it's possible, but if you cash that out in less than a year, then it's going to be treated as ordinary income. So, as opposed to a long-term capital gain, if you hold it over a year, just make sure when you want to cash out, if you want to pay the regular rate or have a business benefit." And he's like, "I didn't think about that." So, in order for something like that to happen, there have to be mainstream integrations. There have to be different rails set up. Things have to happen, right? So what mainstream integrations do you see coming down the pipe in 2024 and beyond?
Yeah, first and foremost, you're hitting the point there, Jamil. Regulation is important to start this. In the beginning, it was all about, is this a commodity? Is it VAT or is it not VAT? Is it money or is it a commodity? And there's still been a lot of hassle around the whole regulation of this, which makes it difficult to digest. I am owing the tax authority anything or not. But back to your question, what I see as a major theme approaching is tokenization of assets. And what you see there is that something that is illiquid as some kind of an asset, you can tokenize it and make it liquid. And it has been a problem for many companies to get this into the, you can say, mainstreamness. However, if you look at a company from US called Invenium, based on some former Disney CEOs or directors, you will see that they have actually, in my opinion, cracked the nut in terms of connecting the dots of a real estate owner, putting their real estate on the Invenium platform, which then makes it into a language that Deloitte or any other big accounting companies can digest. So suddenly you have the accounting understanding once you are tokenizing your assets. And since they have connected the dots, they have already onboarded $70 million of $1 billion as assets on their platform. And I think not only the tokenization of assets, but companies being the middleware that connects the dots from the normal classic thinking world and this new world of Web3 or tokenization of assets, those middleware companies, they will have a huge success. And every time you see a company who really makes that happening, you see a growth in the space. So that is one of the big themes I believe is interesting for me to follow. And then again, going back to the stablecoin, I think the stablecoin will help a lots of companies doing big trades of commodities. And they're bypassing the bank rails. But as long as it's done compliantly, you have a wallet that shows you your escrow. So you have an escrow account being the ledger, and you can trust each other because you don't have those middlemen in between. So stablecoin themes, tokenization of assets, something that's going to be big, and companies who somehow kind of Coinify being the middleware between fiat meets the blockchain goes back to fiat. These types of middleware companies, they are doing the big success for driving different industries of this sector, into a big success.
So it's interesting to talk about middleware. I've seen the prices or the price action the communities in some middleware tokens not have the finest hour recently, but I think middleware will be a part of decentralized money solutions, and the stars have to align the right way for those DeFi solutions to work properly. So what are those stars aligning, so that the UX, the user experience for Web3 adoption can move forward in DeFi?
Yeah, I think if you look at the classic Web3, Web2, and not the Web3 world, I think they will still use the idea of having payments, crypto payments. It's not only for the Web3 world. So starting with the classic Web2 world, when you have a website and you're selling goods, I think you will see that they will all accept cryptocurrencies in the future. A, we talked about the trustability. B, let's go back to the market size. Being us in Coinify trying to get this into companies in 2014, they said, yeah, fine. How many wallets is there live right now? 20 million, maybe we're going for 100 million soon. So what it says now is that we onboarded 200 million in 2021 alone, and it has an adopting curve quicker than internet adoption. And by that, in 2013, you have 1 billion wallets out there. So even the classic Web2 companies will have such a big market that they cannot say no to. It will be a need to have to say, hey, we need to have a cryptocurrency, whatever it is, a gateway that allows me to interact with those people. And then, of course, when you see what's happening in the Web3 space with smart contracts, user engagement, these microeconomies where you actually give the concept or the value back to all the users when they're contributing to something, you will see a huge growth in that. I'm still the one who's been around since 14. I don't believe it will happen overnight. I'm in Dubai for conferences, web panels, different types of things. And there's a ton of great initiative out there for the Web3, but I would still say, give it a year or two before you see the big alignment of especially Web3, right?
That's what I was thinking. A couple of years.
Yeah.
So getting those retail, so that's the alignment of DeFi with institutions, but getting retail, they say whoever gets the attention of retail and love of retail is going to be the winner in the long run, right? But in order to get there, we have to get retail comfortable using payment gateways, and then also comfortable trading too. So how do we get them? How do we get retail comfortable? Because to me, the retail, I know they're not there yet.
You're right, Jamil. And since we are doing, we have a huge backlog right now, signing up new merchants coming from the big payment service providers. We are not there yet. We don't have the biggest super apps. We don't have the biggest merchants except the crypto yet. And one thing is to do an online transaction with a Bitcoin or Ethereum or whatever token or stable coin. Another thing to do it inside a store where you have to somehow interact your phone with a point of sales, like a physical terminal, reading a QR code, or in some extent have an interaction, educating staff, all that stuff. So there is a long way to go. We are pretty successful. We have the 30% year-on-year growth since 14 on payment. So we cannot say that it's not being adopted, but it's not huge yet. At least for Coinify, how we want to win this is to, again, going back to the trust side. The gateways, similar to us, we all need to have the highest level of compliancy. And I think it's good for Coinify to have been around since 14. So we're kind of old brand in this new world and acting as a compliant first. On top of that, as said before, we don't interact with 3,000 different tokens or the meme of the week that now you can also pay with that buying. You can say we actually interacted with Gucci's and Philip Plein, which is a huge fashion brand. They're using Coinify for their payments. But, in general, it's difficult to get the big ones. But if we are telling them that, we are not taking all different coins that could potentially blow up. We only have 16 coins today that we serve for our merchants. We are vetting on Elliptic and other, for instance, tools if the coins have been coming from stolen red tape, because you cannot do that with cash on the counter. That can be stolen money, right? But we can actually detect in multiple blocks where the crypto is coming from. So of course we do that as well. So we need to give them, like, being overly dramatic about how we are serving them and protecting them for anything out there, because it's difficult for them to comprehend this world. And we need to be the protector of the brand. So I think the big success is to be very compliant, been in the business for a long time. And once one big merchant is on, then maybe the next one and the next one will go. It's just a matter of having this, bandwagon effect starting. At least that's our approach in Coinify, and we're pretty successful about that right now. So I'm confident about the future of payments, even though I'm also saying that it's not just right now, it's going through the roof, but definitely it seems like everything is heading in the right direction for payments.
Well, that's good. That's good. I want to get your thoughts on what the payment winner, like you said the USDC, what the long-term payment winners are going to be, or do you think we, out of the 20,000 tokens or whatever it is, that's the market right now, we haven't created that ultimate payment token yet, and what that is going to be, and what the winners and losers are going to be, and what it should look like.
Yeah, looking at payment again, USDT is definitely one of the big ones, right? And USDC is not that big anymore. Then you have another stable coin, the Maker DAO. It's a DAO, very difficult to comprehend a DAO to start with, but the Maker is quite interesting, and they're also making a UA dollar, somehow a dollar pegged stable coin based out of European regulation, which is actually quite interesting. So I think you will find these stable coins to start with. Bitcoin Cash, Bitcoin SV, and a lot of the others who try to make a payment system, Dash for that matter. Honestly, I don't believe they will become that, standard of payments. So it has to be something that's deriving out of the stablecoin theme. If we have the winner yet, I don't know, but at least we have some great contestants in the USDC and the Maker Foundation, and I'm happy to follow that closely to see who's the winner in that sense. Talking about the winner in general, I think it's difficult to compare Ethereum with Bitcoin because they're solving different problems. Bitcoin is a intelligent gold. Ethereum, it's smart contract. But if you're looking at it as what will drive the biggest value if you are an investor, because we also do trade, I would say that Bitcoin is still a limited resource, 21 million. That's it. The halving is quite clever. Yes, it's difficult to comprehend that you don't have a real owner who is behind it. but the technology and how it's built, I see there is no end to the potential value of the Bitcoin. Ethereum, they will, or maybe Solana, which is a very strong contender to Ethereum. I think they will definitely drive the theme of smart contracts and what's going to happen in the Web3 space. So they will also be some kind of a winner in that sense. So that's at least my take on it at this point. And it's difficult to say anything about pricing and all that stuff. People love to say, "Hey, what should I buy tomorrow?" Say, I have no clues, and we are not in Coinify giving any advice. But my personal opinion is that if I was I had $100 and I should bet on something and hopefully get more out of it, I will go for the Bitcoin, price wise.
Yeah, a lot of people ask me what my price predictions are, and I'm like, my answer is always the same: is I don't know.
Exactly.
I just don't.
Yeah,
So,
Jamil, a funny story there. In Coinify since 2014, every Christmas Eve, our Christmas dinner, not at the Eve, but at Christmas dinners, we do a Bitcoin guessing game. And then we added Ethereum when Ethereum came into the mix. We started when it was all about Bitcoin, right? And even though we have all the tech geeks and we have the C-levels and we have everyone, Googling every day, hearing things, what's happening in the market, we are so way off. Because a year after we're looking at what did you write that night and what's happening 1 year after. Is it, who is the closest? And people are off like $50,000, $100,000. And of course, somebody hits it pretty close. But even us as assuming experts, we cannot detect the price of even Bitcoin 1 year ahead. And of course, if we could, we would most likely not do anything by being oracles. But it is difficult, and I will never give any advice. I will only say that if I had some money to put on one thing as an investor, I think Bitcoin, based on the technology, the logic behind it, the scarcity elements, I think that is, I would say that's the most safe bet, but I will never say it's safe. That would be wrong.
right. Something scared me yesterday. I was like, and it goes back to the real world asset tokenization. Okay. I saw it as an interview as part of Anthony Pompliano, who has many more podcasts than me, although I'm catching up. There's a public offering today in the US for Reddit, right? and there's a coin called Reddit. Similar name, not related at all, right? But the Reddit coin is up 400% in a week or two. And it looks like a theme may be that meme coins get, with the same name as stocks in the US, get launched at the same time. And as a competitor to those real world stock assets, that to me was a little scary, because, you know, it might undermine the stock, right? Or I don't know. I want to see if you have, what are your thoughts would be in some of the security things that we need to look at when we're launching crypto on real world assets, to make sure they're aligned with what those assets genuinely are.
Yeah, it's a big theme to jump into, but you're completely right. We have an issue here. And with these meme coins and pump and dumps, and maybe using AI tools to outsmart everyone, making a lot of posts and a lot of fuss about something, and even taking another name and bringing that up and make a pump and dump scheme, I think that is definitely a problem. And that's why we need the regulation. We need to regulate this market much stronger. We cannot see a new FTX case once again. We cannot see that these people can do $1 million overnight because they're pumping up something, people are following, and then it all crashes. It kills the industry and the professionalism behind the beautiful, like if you look at blockchain, it's a beautiful technology. It solves so many problems, but we need to detect this. We actually been part of the MiCA regulation out of Europe. We, as a group of different companies in the industry, we said, listen, we need to help Europe to make a stronger, you can say, a stronger framework for how we regulate this space. We started with the ML5 directive and now moving to the MiCA. And we did more than 200 amendments, and I think more than 100 has been implemented to the MiCA regulation. Simply because we need to help the governments, the governmental bodies, to regulate this stronger, to find out who's doing a classic scam, and also finding them and bring them to some kind of a court, like you will do in this classic world of stocks or any other. So yeah, my take is that I think it's sad that people are still kind of stupid, honestly, to jump on these things and hopefully get rich overnight because they've read something, and hopefully at some point there will be enough of these scams that people are learning about it and say, listen, we're too bright not to jump into it, or there's a higher level of regulation and authorities to find the people and somehow give people penalties. I don't know what you think, Jamil, but something has to be done, right?
I agree with you. I'm like, I would love to see the industry succeed sustainably for the long term, right? Because the technology is wonderful, I just think we have to address, things up front and not just, after the fact. So,
Indeed. And that is a problem because things are getting so fast. So once they regulate something new is happening in the market. So, regulators and the law will always be behind with the exponential growth of things. And maybe that's a problem when you add in different types of technologies into one, especially the AI world, and then adding this, you can potentially build mechanics that is so difficult to detect, even though we wanted to. So hopefully people also have a good mindset, being reluctant about potential scams, so the scammer doesn't get that pump and dump happening, so to speak.
I agree. Some more to be revealed, right? So
yes, indeed.
So I want to thank you very much for your time today. I really enjoyed speaking with you. And one last question. It's how can people find out more information about you, about Coinify? How can they become a client? How can they do that?
Yes, at coinify.com, you will read about our 9 different financial products that we are serving, starting with the payment and trade as the big ones. And then we have a lot of different specific things underneath. So at coinify.com, you will be able to read about our service. Otherwise, if you're in the trading world, we are at OK Exchange. We are very close to Ledger, which is a super compliant and strong exchange where you are using a stick where you can encrypt a stick that is with a high level of security, and then you can take your crypto offline, so to speak, or your phrases. So Ledger is something we do very close. And if you want to do a huge trade, you can also do that by coinify.com and hit that. I want to trade for more than $50,000. Or again, we do that serving Ledger's client as well.
Awesome. Thank you very much for your time today.
Thank you. Thank you, Jamil. Thank you for having me. Have a good day.